SoFi stock, SOFI, just can't seem to get a break. I mean, the stock is down yet again following their second quarter 2024 earnings. And looking at the stock over the last 3 years, it's lost over 50% of its value. In fairness, I have called out, and you can look at, prior videos that I did on SoFi, back when it was trading, at a much higher price. And I just said, I just couldn't get my head around it. Now, when I look at SoFi, I really am intrigued. I think, as I cover on this channel, many of the companies I give sort of the thumbs sideways, thumbs down. This is one of those few companies where I'm starting to say, this is actually looking pretty good. As always, this is not financial advice, but I'm just sharing my own personal takes on thinking about businesses, thinking about investments, thinking about their long-term prospects, what's driving it. And, it's impressive that you have a business where the stock price doesn't react favorably, despite the fact that they beat analysts' expectations, both on revenue and on estimates. The CEO talked about exceptional operating results. They beat their own guidance. And you can see, they previously gave a range of 555 to 565, beat that figure, beat the adjusted EBITDA figure. I mean, this is a management team that consistently says, hey, we're going to do this, which is, by the way, this is better than most companies can do. And then they consistently beat it. So I like the credibility that management's shown. And by the way, you've seen sizable insider buying. So you see beat Wall Street estimates, beat their own guidance, and then, by the way, raising expectations for the year where they had their original guidance and their updated guidance, which was higher than now the next 2024 guidance that shows, revenue continues to creep higher, showing 17 to 19% growth, 25% EBITDA margins, sizable GAAP earnings. That's what I was looking for in my prior years when I covered SoFi, saying, hey, I wanted to see this company become increasingly earnings positive. That's including stock-based compensation as an expense, which is real, seeing real increases in tangible book value. So I'm looking at the changes with this, and I'm sort of saying to myself, these are fantastic developments looking at SoFi, and yet the stock can't really catch a break. It's still, in a house of pain, down 50% over the last 3 years. I think the reason why recently it didn't rally based on the second quarter results is because of the increasing headlines. Yes, the lagging indicators like unemployment and US GDP continue to be rock solid, very strong, but some leading indicators might suggest that the consumer could roll over. One recent article was suggesting U.S. consumers were showing signs of flagging, and companies and analysts are warning about spending habits. This would not do well for a company that's focused on personal loans. Now, they have tried to manage their risk exposure by focusing on some of the higher end consumers and, folks that would need those personal loans. But at the end of the day, their loan book, you can see the fair value of their loans as of June 30th, 2024, 16 billion roughly was from personal loans, which is significantly more than student loans and home loans. And it's a significant portion of their total loan book of around $23 billion. And so it's not really surprising that if you're a Wall Street, analyst thinking, okay, maybe there's going to be a credit cycle, things get worse. Who are the personal loan companies that we can short? And so that's the reason why you have a nearly 20% short interest in terms of the free float for SoFi. And so I think that is an element that's holding back SoFi shares. That obviously could reverse some point in the future, but I do think it's going to require sort of the all clear from the economic cycle before those short sellers give up, because you can have a quarter like this where the execution's very solid, but they're not conceding yet. The hedge funds, I previously worked at a multi-billion-dollar hedge fund. I know they can be ruthless, and so they're leaning into the capital cycle is my own personal guess of what the hedge fund community is looking at and thinking about with SoFi. Despite very solid execution, management tries to allay these fears, however, by talking about their credit trends, looking at the net cumulative loss ratios for various different vintages of loans, saying, look, 2017 was our worst year, and that was coming in below 8%. Their goal is to have 7-8% in terms of loan losses, ideally under. And they're saying, look at the more recent vintages, they're all performing significantly better relative to where 2017 was. So they think their underwriting standards could lead to, results that are well in line with their own expectations for a personal loan book. And they do make the point that, look, if 7 to 8% is sort of their ceiling that they're comfortable with, saying, hey, we don't want to get there. But they did make this point. These are new slides that they called out, saying, look, in order to surpass that 8% life of loan losses on all of their first quarter 2020 to first quarter 2024 originations, the remaining 44% unpaid principal would have to experience 11% loss rates, so significantly above, what they've seen historically. So this does suggest some conservative aspects to their loan portfolio, despite having a significant personal loan book. So what did management say in the most recent quarter about delinquency, loan loss trends? This is using the new and improved chat feature at AI Ticker Chat. I think it's a huge upgrade. And by the way, later this week, or hopefully later this week, we're going to be announcing that there's a little bit of a teaser that it'll be actually completely free to use beyond just on 1 month demo. So I'd recommend you check it out now, just because this is a huge upgrade in terms of chat, where now you can just chat. I mean, if you're interested in learning about your investments and just want to ask questions, in the past, you had to select this specific document to ask. Now it knows, it's smart enough to go, okay, I'll help you effectively search for that. And so, if you were to say, well, what did management say in the most recent quarter about delinquency and loan loss trends? It talks about how management called out generally more favorable trends, suggesting that the prior delinquency rates may have peaked. Now, I'm skeptical about that. They're saying that they're seeing it having peaked in terms of delinquency rates. But if you do have a worsening in terms of a recession or something like that, I suspect it might be sort of like a roller coaster where, delinquencies would tick up again. But so far they're saying, look, they're bending the curve in terms of delinquencies because of their credit standards, in terms of having such a strong loan origination standards. So what are my thoughts on SoFi in terms of the valuation and where does it go from here? First of all, as I mentioned at the beginning, this is not financial advice, my own personal take on SoFi. Also, quick plug, recently Robin, a premium member of Unrivaled Investing, commented that, this is a direct quote, "I'm an extremely happy customer of Unrivaled. The information services you provide to me are invaluable." That's a direct quote. Then he also said, this follows another subscriber. This is another subscriber commenting, another direct quote, "I'm currently ahead of my investing goals to retire at age 45. That's thanks to Unrivaled." So if you're looking for compelling investment ideas, come check out unrivaledinvesting.com. And so I also do exclusive monthly videos. I just posted my exclusive monthly video for July. And so as I think about SoFi, I mean, let's take a step back. What do you look for in your own investment journey? Because it's important to recognize not every investor is the same. So it's important to have some soul searching, like what are you looking for? Are you a day trader? Are you looking to, buy and sell? I'm not. I'm looking to buy and own and buy and verify, where I, find management that I can trust, management with skin in the game, ideally management that's been buying. And I've called out prior videos, Anthony Noto, he's been a big buyer of SoFi stock. So that checks one of the boxes. Another aspect to my own personal investment journey is something where it strikes me as unrivaled. And unrivaled, a lot of people can say, well, wait a second, how do you definitively prove that something's unrivaled? One of the easiest ways to do that is to see if a company's winning market share. If the company's going out to battle every day, and every day they're just slaying it, and they're saying, look at all these customers we brought back, and by the way, we brought back way more customers than most other people, then you're arguably unrivaled. And I'd say the execution here with SoFi, where they're growing their customer base by 40% plus, suggests they're unrivaled. And that's what you're looking at here. So I think the execution's very solid, and I like the tone where they say, hey, we're going to do this, then they beat it consistently. That's what I like. I like the insider, the inside ownership and purchases. I like that they're taking share, and I like that they're increasingly becoming profitable. And this is the final thing that's really jumping out for me. I like that they're business is becoming more diversified. And with their guidance for 2024, they're talking about a 50-50 revenue split between lending and their tech platform and financial services. And this is a big deal because this means, and this has gone from like 100% lending to 50-50 during this time. And so that is a big credit to the CEO, Anthony Noto. And the reason why that's a big deal is because that tech platform and financial services should be less sensitive. Not, I'm not saying completely not sensitive, but less sensitive than the lending business to economic cycles. So they're effectively making their business less sensitive to the cyclical forces that you have with the lending book, where all of a sudden you have to worry about loan loss ratios, by rapidly growing their financial services. So what's driving this? Now, a big part of what's driving this is actually a spread. Now, they talk about a net interest income in financial services. And like when I read that at first, like net interest income for financial services, doesn't that mean another lending book? So what they're doing, what they're really talking about is the spread. So they have consumers. And the reason why they're winning is because they're offering rates that you really aren't seeing with many other firms out there. Bank of America is closer to zero. And they're saying, hey, our savings account yields 4.6%. So that is yielding, more consumers. That's driving that 40% growth. So that execution, this is one of the tools that they're using to take market share. And that 4.6% is then invested in, let's say, the Fed funds rate that's getting, 5.5%, 5.25%. So that spread off the customer deposits is helping to drive like an 80% growth in financial services. Plus their tech platform, which they talk about being the AWS financial services. So that growing should be much more stable over time than lending and should be very, very lucrative. So that's what I like to see. I mean, it is worth calling out 4.6%. Yes, it is good. It's not as good as you get at Interactive Brokers. That's personally where I keep my cash, currently getting around 4.8% at Interactive Brokers. See the link below. But SoFi does have a slew of products that are actually quite compelling. Seeing this 2.2% back, cash back on credit cards did get my interest. I don't have any financial relationship with SoFi. I might look to change that just because 2.2% back on a credit card, that's better than anything I'm currently getting. I'm currently getting 2%. So, it's impressive how they're doing it. And the reason they structured this, and this is very intelligent, with this 2.2% back, is in order to get it, you have to have a direct deposit into a savings account or a checking account with SoFi. So they're reinforcing this sort of virtuous network of sort of saying you have to, get your auto, your paychecks need to go into our accounts, which, helps feed our spread business. And in order, once you've set that up, then you can get this extra 10% boost on your credit card, in terms of the cash back to you. So I think this is broadly very intelligent, reflects, shrewd management. Some might say, well, wait a second, this isn't rocket science. This is incredible. The reality is most banks aren't doing that. Most banks aren't offering the 4.6%, and most banks aren't, growing their customer base by 40%. Judge the businesses based on their results, and to assess whether or not something's unrivaled, and that can change over time. But based on these results, I'd say they are quite solid. So this raises the question, okay, so what are my long-term thoughts about SoFi in terms of their potential? Well, I'm actually very curious, what has management said about the long-term? Because they alluded to it during the call, saying, hey, our long-term expectations are still in place, and they referred to the end of 2023. So once again, I'm using the new and improved AI ticker chat feature. And so I asked, did management set an EPS target for 2027? And no, they didn't set a target for 2027, but they did provide a target range for 2026. And they talked about their expectations for growth beyond 2026. And they set an EPS target, and you can check the source doc, so you can go straight to where they set it here. So you have this attribution of 55 cents to 80 cents. Let's just round it to around 70 cents. And saying, look, they can grow 20 to 25% in the years ahead, based on having these financial service products that are winning share. And keep in mind, every time you have that credit card, that's going to be creating fees for them, another income line, this, people depositing money, that'll create an income, the net interest spread for them. So I see them developing different flywheels. And by the way, it's not like their loan book is suffering. They're doing well right now. There might be pressures if there's a cycle downturn, so that's important to be mindful of. But for them to target, let's say 70 cents, and for the stock to trade at $7, and for them to say, hey, we still think we can keep growing at 20% plus in the years ahead, it does strike me as a mismatch. It does strike me as a potential where if they continue to execute, and so this is a big if to continue to watch Anthony Noto, if they continue to execute, it would not surprise me if this stock re-rates much higher in the years ahead. I mean, just think about it. I mean, 70 cents in 2026, that implies 10 times earnings multiple for a business that could be growing 20 to 25%. So in that case, maybe it gets reset to 15 times, maybe it gets reset closer to a market multiple, maybe even a premium, because people say, hey, this is better than market. You don't have stories where management's that confident in terms of the long-term obvious. So, I mean, that's another aspect of my own personal investment journey. I'm looking for things that strike me as obvious. Management saying, look, this is obvious. We're going to be crushing it. But they do say, hey, it depends on, checking the full context. It depends on, sort of the macro environment. It shows the direct quote, assuming no meaningful change in the macro environment, no significant new business launches. So, I view this as management has a history of saying this and doing better. So there's a chance they even beat on that, in which case maybe you're even talking about a high single-digit multiple, in which case the re-rating could be 50 to 100% type of upside. So I'm looking at SoFi, and I'm very tempted to consider a teaser position now. I'm very tempted to, just start buying personally. I will call out my own personal journey, as always, to subscribers at unrivaledinvesting.com. My main hesitance, and this might be a mistake, is to be mindful of the capital cycle, to be mindful that, look, the recession hasn't been defeated, at least I don't think. And so if there's a recession, could you have further pressure, where they say, whoops, the delinquency rates, we thought they peaked, but actually they started ticking up again. And we saw that in the third quarter. Could you have an element like that? Or maybe they see it in the fourth quarter, and if you have that sort of element, does it, have short-term pressure? And maybe that's just, I'm being a little too conservative short-term, because this fits, similar to my Lulu video, where, one of the golden rules of investing, I feel like, is, and this was something a friend mentioned, which is that if you find a business that customers love, but Wall Street doesn't, oftentimes it's Wall Street that'll come back to, what the customer loves. Wall Street will reassess and go, okay, we love it too, if the customers ultimately love it, because you can generate meaningful profits, meaningful growth. So as long as they continue to execute and have clever approaches to take market share, customers love it, then I would think long-term, the stock could benefit as well. If you have a different take on SoFi, I would absolutely love to hear it in the comments below. Thanks so much for tuning into Unrivaled Investing.